So on to, the general market stock.
The
So
stock
the first
market.
episode that we did last year, right? You remember I had an argument for Google.
Yes.
That's what I said I was going to refer to. I had an argument for Google and Google has returned, I think, more than 60% since then. So I can
That
pat
was a
myself
good
on the back.
prediction.
I can pat myself on the back, which is, I feel, I think whoever is listening, you can go back to and listen to that episode. I think I made a very good argument for them and the space that they are with the AI. AI, they are beginning to have a stronger foothold with their Pixel devices and just technology in general. I feel like they are, or they should be the leader.
Number one.
Barring this AI wave and the moat that Nvidia has built. Yeah, I think they should be number one. If I could speak on another one is Amazon as well. I think
Yeah.
Amazon is in a space where Amazon has become such a sort of like essential services. Essential
Mhm.
services. Like you want to get something and something in 2 days, or a day,
Yeah.
it's there, right? And
Mhm.
they are investing. I didn't know this until, I was recruiting for them last year, seeing the amount of investment that they've done in AI. It's
Wow.
just, and they have like chips and data centers and everything everywhere. So they are also, they are not sleeping on that, on
Of
that.
course not.
They are improving, they are improving their offerings at Amazon.com, and also they also still have the Prime Video. There's just a lot of offerings that the company has, and I
Mhm.
think the value of the stock is still going to reflect that. If there is a correction in AI, in the markets, I don't think it is going to be
It will affect
a
Amazon. That's one thing I
yeah, yeah,
know.
yeah. That's what I'm gonna say. I was gonna say that it will not affect Amazon. Also, I don't think, just to speak on that correction, everybody has been talking about the bubble busting. I don't think it's going to bust. I think it's going to be a deflation, right? So the bubble is
No.
going to deflate a bit. Well, not like a bit, but it is not going to be a shocking or a gradual
Yeah.
pop.
Yeah.
I think it's going to be like a deflation because there is real value in Nvidia. There's real value in this $1 trillion companies, Nvidia, TSMC, Google, Microsoft, Apple.
Yeah. Yeah.
They
Yeah.
might be overvalued, but so they are still the leader in
Our
whatever
value.
category that they are in. So I feel if there is going to be companies that are going to be most affected, to be the private companies and whatever valuation that they have.
Yeah.
OpenAI at their over 100 billion valuation, companies
I'm
like
talking.
Scaled AI and just those companies that have
Yeah.
raised
A lot of
unbelievable
money.
amounts of money, and we're going to have these incumbents that are going to, eat their lunch and drink their milkshake. So that is where,
Yeah.
so stock in general.
So
Um,
energy stocks, I know energy. So I'm for energy stocks this year. Oh, that's like everything is points to energy stocks doing well. So
yeah,
energy stocks and consumer stocks. So the Amazons of the world, the Walmarts, those are enduring.
hmm
Nothing changes about them. What even happens is they get more efficiency gains with better technology. And
yeah,
energy stocks, without saying too much, will benefit from the current geopolitical issue that we are seeing out of Venezuela. And even aside from that, they were still going to benefit from the AI wave because like we said in the last episode, the bottleneck in this AI revolution or AI transformation is energy. So data
hmm
centers are being built, energy needs to be, put together to cater to the data centers. So this year they're just going to see a lot more gains again. So if you are a betting man, go buy some ExxonMobil. This is not financial.
yeah, energy stocks in general. I think that was one of my picks from last year, and they didn't do incredibly well, but they are. I feel like they are primed for
This
growth
year,
still. I just want to get your take on one thing while we are talking about stocks and the S&P 500 and whatever ETFs that are based off of it, right? The major driver, so the S&P 500 or let's say VOO, for example, is not
mm,
equally weighted with the
S&P.
over 500
Yeah,
stocks that are there. They are heavily weighted for 40% with the Nvidias, the
AI.
Google,
Yeah,
and the tech stocks, right? Those
yeah,
growth
yeah.
stocks. I'm seeing a lot of arguments about. So if there is a correction, I think we're going to have like a deflation, right? How that will affects the entire market. I want to get your take on that. One thing I've been thinking about recently is about diversification. If the S&P 500, which is where everyone, thinks about diversifying. So the typical advice that you get is to just invest in the S&P 500, buy the entire market. If
Yes.
it is so much heavily weighted towards the Magnificent Seven, right? Is that really diversification? I don't,
Hmm. The
right?
thing is,
So if you have 40%, let's say you are entirely invested, the bit of money that I have invested right now, before I spend it, it is entirely it is entirely in VOO.
yeah,
I'm looking at it, and 40% of that, like,
it's a lot.
is, although there's the argument that it is those stocks that have driven the most growth,
Gains.
the most gains over the last couple of years. Somebody on I think on Yahoo Finance said that he made an argument for value investing and against the S&P 500, and it was like everything is always all right until it isn't.
Yes.
So maybe he has a point there, or maybe it is his ego speaking. But yeah, just touch
Yeah.
briefly on that. Let me see what you think.
See, I understand like the concerns, but I've also seen a lot of the doom and gloom, you know, opinions from a lot of finance pundits and analysts all over social media, on Twitter. And what I believe is one, of course, the S&P currently or last year ended as its highest or second highest it has ever been in over 100 years, which is crazy. And that's because the world has been moving and the companies that have been in that basket have also been doing well. In terms of diversification, it's also very diversified. Of course, I agree that 40% are in the Mark 7 and all these tech stocks, but you also have companies that are out of different parts of the world, some European stocks, you have some energy stocks, and the benefit of that weighting is you get the gains of these great ones and can also, if there are losses, you can
Yep.
be cushioned by whatever other stocks are in that basket. And they always they rebase the companies and the weightings of the companies in that basket. So if for a retail investor, so it depends on who you are speaking to. For a sophisticated investor, value investing is the go-to. That's Warren Buffett's mantra. So you find the stocks, but you need to do research. It's not just going to come to you. But for the retail investor, the best bet is just to stay with. That's my advice to anyone who either doesn't have the time or doesn't understand how these things work and just wants to put money in the stock market. So I'm still of the opinion that if you are retail, you want to enjoy some of the upside, that's the best place to be. Because if it goes down, it's just like the logic behind it is if it goes down, the world is going down. So it is what it is.
Yeah.
So yeah, that's my opinion on it, to be honest. Is as diversified as you can get. And if you want to pick stocks by yourself, hopefully you pick right and you have all the information. Of course, you can't have all the information. There's still information that will not be available to you. That's why we go for the safe option for retail.
Safe bets. All right. So we are 50 minutes into the episode now.
Yes.
It is crazy how much time has passed. So I think, can we make this like a 2-episode thing? So, okay.
Yeah, we can.
Thanks for listening. We are going to put out another episode, which is going to be part 2. We're going to talk about mostly Nigeria. We're going to talk about